What would happen if Samsung, one of the world's leading technology companies, decided to acquire Nvidia, a powerhouse in the realm of graphics, processing units, and AI? Would it be a match made in tech heaven or a corporate misstep? To answer this question, one must delve into the intricate process of corporate acquisitions. Inspired by the successful acquisition of Whole Foods by Amazon, Samsung must adopt a comprehensive, well-thought-out strategy. The first step in this intriguing dance of business is the initial proposal. The CEO of Samsung would approach Nvidia's board of directors, expressing interest in a potential acquisition. This proposal would likely outline an offer price per share and detail how Samsung plans to finance the acquisition. This could be through cash, stock, or a blend of both. Once interest is expressed and a proposal is on the table, the due diligence phase begins. Samsung's team would delve into Nvidia's financial health, technology portfolio, and market position. The aim here is to discern potential synergies between Nvidia and Samsung's existing businesses. To do this, they would scrutinize Nvidia's intellectual property, contracts, liabilities, and any potential legal or regulatory issues. Following due diligence comes the negotiation phase. Samsung and Nvidia's board would hash out the terms of the acquisition, including the purchase price, deal structure, integration plans, and any potential contingencies. To sweeten the deal, Samsung might offer incentives to Nvidia's management team or key employees, ensuring their support and retention after the acquisition. But even with agreement between the two companies, the acquisition isn't a done deal yet. Regulatory approval is required, given the size and scope of Samsung and Nvidia. Antitrust authorities, both domestically and internationally, would need to be convinced that the acquisition wouldn't substantially lessen competition in the relevant markets. Finally, the last hurdle to clear would be shareholder approval. Samsung would seek the green light from its own shareholders, especially if the acquisition involves issuing new shares or taking on significant debt. Nvidia's shareholders would also need to cast their vote, with their focus firmly on maximizing shareholder value. In conclusion, the acquisition of Nvidia by Samsung would not be a simple transaction. It would be a complex process involving multiple stages, each requiring careful strategy and execution. From the initial proposal to due diligence, negotiation, regulatory approval, and finally shareholder approval, each step is crucial in shaping the acquisition's success or failure. Understanding this process is crucial for any business enthusiast. It underscores the importance of a comprehensive acquisition strategy and the myriad factors that influence its outcome. So, the next time you hear about a potential acquisition, remember, it's not just about one company buying another, it's a strategic, multifaceted process that can shape the future of both companies involved.
Could you imagine a world where Samsung acquires Nvidia? The tech world would certainly be stirred, but what would Nvidia do to defend itself? One of the most common defense mechanisms is known as a poison pill. This is a strategy where Nvidia's board could set up a shareholder rights plan. If Samsung's stake surpasses a certain threshold, the rights plan would kick in, diluting the stake and making the acquisition more expensive and less appealing. Another possibility is Nvidia rallying a white knight. This isn't a medieval hero, but an alternative buyer who might offer shareholders a better deal or align more with Nvidia's strategic goals. If Nvidia suspects any foul play in Samsung's acquisition attempt, they might resort to litigation. They could challenge the validity of Samsung's offer or seek legal means to delay or stop the process. It might sound drastic, but it's all about protecting shareholders' interests. Nvidia could also consider corporate restructuring. This could involve spinning off certain divisions or assets, making the company less attractive or more difficult to acquire. It's a complex move that could create barriers to acquisition or even increase Nvidia's valuation. An interesting tactic would be a proxy contest. Nvidia's board could try to sway shareholders against the acquisition, pointing out potential risks or drawbacks of Samsung's offer. They could seek support from institutional investors or proxy advisory firms to vote against the proposal. Lastly, if Nvidia has a staggered board where only a portion of directors are up for election each year, it could slow down the process of replacing the entire board with directors who are more open to the acquisition. In conclusion, an acquisition of Nvidia by Samsung would be a complex and highly scrutinized process. While Samsung would aim to present a compelling offer and overcome any obstacles, Nvidia's board would be responsible for ensuring the best outcome for its shareholders and protecting the company's interests. The success of the acquisition would depend on a variety of factors, including market conditions, shareholder sentiment, regulatory decisions, and the ability of both parties to navigate the deal-making complexities.